Good morning to you. You've heard, I hope you heard, both Mr. Cramer's views on the world, also Mr. Siegel's views on the world. What are yours?
Ultimately, from a market perspective, we have some certainty in some areas and a great deal of uncertainty in others. If we think about what is priced into the markets right now, we've been talking about recession risks for months now. So I do think that when the recession does eventually come, probably next year, it's going to be something that is very unsurprising. On the other hand, we've been talking about the Fed all year as well, and there's still a considerable amount of uncertainty when it comes to what the Fed is going to do next year and into the end of this year. If we think about the Fed funds ceiling right now versus, what the Fed thinks, what the market, the Fed thinking about 4.6%, the market thinking nearly 5%, that gulf between expectations is going to continue to foment volatility in the market.
So, Samir, are we in a bear market rally of sorts, or is there a turning point here that's just taken place?
We're still very cautious on equities. We do feel that we are still in a bear market rally because we haven't had that relief coming from the Fed. And in fact, things might get a little bit choppier from here as long as there is this big gulf between market expectations and Fed expectations in terms of where the Fed funds rate goes. So I think we're going to have to continue to be patient for the rest of the year with these markets and expect that markets are going to continue to be very sensitive to incoming data, to headlines. We're seeing markets even being sensitive to some of the things going on overseas, which in the U.S. is not always typical. So I think we certainly have to be patient with the equity market in this environment.